Happy Cinco de Mayo to everyone that's here watching this today. As we went into the weekend, you can see there's a lot of green behind me. There's a lot of green on the screen next to me. This was Friday afternoon. Things were looking really good. We had assets that were going into the weekend, nice and bullish. The tech sector had come back. We saw companies like NVIDIA, Microsoft had great earnings. They were up 11% going into the day, going into the weekend. Today is a bit of a mixed bag. We came into the day down about 1%, give or take, on the averages. And from there, if you went into particular sectors, you saw pullbacks. But between this morning and lunchtime, we've actually seen a bit of a rally in the overall markets. The biggest thing on my screen coming out of this morning is that Warren Buffett made an announcement that he is going to be stepping back as the head honcho, all right, for Berkshire Hathaway. Berkshire was down about 4.5% today. I noticed because I own Berkshire Hathaway as part of my long-term portfolio, and that was the biggest loser in my long-term portfolio when I was looking at it earlier today. He has had successors ready to go, lined up, and have literally been doing the large parts and carrying the heavy loads for Berkshire Hathaway for quite some time. I believe it was just a shock to the system that he came out on the weekend and made this announcement. But I believe that we'll see those shares fully recover and start moving again with the markets in no time. Let's take a look at the S&P 500. I want to take a look at a couple of ETFs and some notable stocks going into this week. This is a long-term chart. Last week I showed you color codings. This week I wanted to go long-term because I want to show you what's happened here in relatively the last couple of years. So we're going all the way back to 2020. This was the bottom of COVID that you see here. And then we see that big move up. We see a pullback, and we saw an extension of that move that literally looks like it was the same move that happened almost the same time frame. If that's the case, should we expect a better pullback like we saw in 2022, where we saw the markets down double digits? I believe most of that all got made up in the first 3 months of the year, January, February, March, between Inauguration Day and what happened in the beginning and the middle of April, because we dropped to a 50% level, right, from the bottom of 2022 to the top of 2025. Within a couple months, we saw a 50% pullback that happened. Literally the same thing that happened here from 2020 to 2022. We saw about a 50% pullback there. It just took the better part of nearly a year, where it only took 3 months here. The other thing that's interesting is we went back up in the month of April as fast as we came down. So as we went into the month of May, as we came in the month of May, we're seeing at least some bullishness here. So this actually doesn't line up at all with sell in May and go away. Now, sell in May and go away is a 6-month strategy, so I can't really just throw it all out after the first couple of days. But what we've seen, and what I shared with you last week, is that May is typically a bullish month. We typically see buy in May and then, maybe revisit in July. Now, looking long term, if we were to see the kind of advancements that we've seen before, then we're looking out into 2026 with a target of 750 on an asset right now that's still trading in the mid fives. If you look at extension levels and you look at these monthly candles and these Fibonacci pullbacks, that's the S&P 500. I did the same thing with USO, and you get a completely different outlook. USO has seen multi-year highs, go all the way back to 2018, and USO was above $125. That's when oil was just out of control. Fast forward to COVID in 2020, and we saw the USO drop down into the teens. We're talking about a $125 asset that went below 25. That was a huge, huge number. In fact, I remember looking into May of 2020 when we actually saw futures contracts of oil I believe they actually went positive, meaning that people were paying you to take the futures contracts. Now, that didn't last for very long, but it did help to push this price of oil down. Where are we at now? We see a high, we see a multi-year low. We are sitting, folks, right in between the 38.2% and 61.8% retracement. So if you want long-term breakouts for USO, you've got a long-term breakout above 85, you got a long-term breakdown below 60, and we are closer to the breakdown than the breakout. If President Trump says, drill, baby, drill, if they plan on really pushing the oil narrative, filling up the U.S. reserves, and then some, then it's my decision that I'm going to be looking for any strategies that are telling us to get out of oil and get short oil. Now we're in a pattern right now with oil. It's a bullish pattern, but it's not been working out so far this year. We're going to be out of that pattern here in next 2 months. So that might be the time I start looking for bearishness in the oil markets. Gold is the final asset I want to talk about. 5-year chart of gold. The lows we were seeing below 150, and that's where I marked the low end of the Fibonacci back in 2022. The highs, we just saw those last month. If you take a look at the trajectory we're on right now, and you take a look at the trend, then the next target for gold is 375. We have huge support at the 50% level. That is around 230 for GLD. All right. Why is USO so high? Well, we've got a projection going on here of a move, an expected move of 3.5%. Right. So what I mean by high is, am I talking price? Am I talking volatility? What am I talking here? I'm talking about options. The options volume on USO is extremely high right now, as the price is extremely low. We're expecting to see moves in USO because of the concerns, the influx of supply and the concerns of what's happening over in the Middle East. We are expecting 3.5% move just this week alone. Another notable is, let's talk about a couple of earnings that I'm looking at this week. AppLovin, #1 stock in terms of where it moved in 2024, where it moved all the way up to, gosh, it was above $500 a share. This was like a 2,000% move in the year. So you're not seeing what happened prior to what we're seeing in the last 6 months. But in the last 6 months, we've seen highs on AppLovin from above 500 down to $200 a share before rebounding and trading right around the 300 mark as we speak. You know what has gone up? Implied volatility. Earnings are out in 2 days on this one. It's at its yearly highs in IV. All right, we don't know where it's going to go. Nobody really does know. But the expected move is it's going to bump 11.5% here based on the calls and puts that expired this week, right? Because it doesn't take a rocket scientist to figure out where these are going. You take the at-the-money call and the at-the-money put that are expiring just after earnings. And it gives you a really good idea of what option traders think about AppLovin or any other stock. And speaking of other stocks, Coinbase is releasing earnings later this week after market close on the 8th. The move we're expecting on it is around 11%. However, I'm going to mention this. It's a lot cheaper than AppLovin. Coinbase is a lot cheaper in general, right? One of the stocks I haven't seen in recent memory where it was this cheap going into earnings. So, summary. Markets are short-term volatile still, but look at the long terms and they're pointing to new all-time highs. Why? At the end of the day, it's about money supply and where we're going to need to come up with money for all the additional defense, all the additional border security at the southern border, and quite possibly where we're going to get the money if we do some sort of tax breaks or at least extend the Trump taxes from his first term to become permanent. Money supply. Digital assets are the last thing I wanted to summarize on. They're the cheapest. They have some of the cheapest options we've seen all year.